I made them the following proposition. Give me $25,000, 1 year's tuition to go ahead and start trading on the New York Merc. And if I was successful, then they would save $50,000. And I only had $2,000 left in my trading account. What should I do? And basically I was saying, I don't have money to kind of continue this. You got on the floor, right? That you learned by trial and error, which that first 6 months was just part of what became a lifetime of trial and error. And that there was in-place cash flow. So if you invested $100, you could earn $8, $9, $10 in place day one. And what could you do to improve that over time? So we went from 98% occupied to 68% occupied in a day. And I realized, okay, it's not so easy to be in the real estate business. You got to really know what you're doing, duh. We've owned 3 hotels. We own, one of my favorite deals is a deal in East Falls, Pennsylvania.
Hi, everyone, and welcome to the Jewish Professionals Podcast, the JP Podcast. I'm Hillel Bainach.
And I'm Benjamin Winters, and we're students at Yeshiva University, just looking for some advice.
Our aim is to bring to you Jewish professionals from every industry to learn from their successes and failures, how they grew in their career and Jewish identity, and made a Kiddush Hashem along the way.
We hope you can apply what you learned through the lessons to your own life as they pass the torch to us, the next generation. We can't wait to go along this journey with you. This is the Jewish Professionals Podcast.
Woo! Here we go. The long anticipated episode coming to you post New Year's in New York City. I didn't make it to the ball drop. I didn't have the real estate there.
I didn't either, and it's always been my dream. So I think next year I have to go. I've been in New York twice now for New Year's, and I always, as a kid, would stay up. I wouldn't do anything so crazy for New Year's, but I'd always make sure to watch the ball drop. Somehow it's escaped me twice for New Year's that I haven't been there. But next year, you can bank your buck on it. I will be there.
55 years. I've never been there. So,
I think we can make it a field trip.
we should do that together.
Okay, fine. Yeah, there we go. Us and everyone else.
The thing is, I think it's one of those things that might be better on camera. And I think it certainly is better on camera. Because once the reality probably is you're stuffed in there getting other people's.
Yeah, they closed down Times Square, that area for a little bit before. It's a mess. But it's still my dream to get there for the Chavaya.
Not to dig too deep, but you know that there's once you're in, you can't go out. So if you need a restroom or something, you're
done. Right.
Left to your own devices.
People bring buckets, I heard.
We could speak about that more a little bit. On this episode of the JPP, the Jewish Professional Podcast, we are honored and graced with Yoni Leifer, the chairman and founder of L3C Capital, bringing over 20 years of experience as a real estate investor, supported by a deep global network of private and institutional capital. Prior to founding this, he spent 17 years trading oil and energy products on the floor of the New York Mercantile Exchange. And we also have the pleasure of being in a shiur with his son at YU. Ari Leifer, special shout out. But Yoni, thanks so much for joining us today.
Oh, thank you. And thank you for that grandiose introduction.
Definitely grandiose. I think it's a great adjective.
Pulled right off our website, I presume.
Mix of everything, you know. But let's hear about that. Before you became the real estate guy that you are today, before you had an amazing son like Ari, and before even you were trading on the New York Stock Exchange, what was your upbringing like?
Well, anyway, first, it's an honor to be here. And shout out to Reb Belazon for dealing with these 3 guys. Can't be easy. I grew up in Far Rockaway. The 6th town, some refer to it as West Lawrence, but grew up in a great time, like the kind of the prime time Far Rock, where everybody wanted to be. And I'm the youngest of 4, so my 3 elder siblings were born in Brooklyn, and my parents moved to suburbia just before I was born.
Right.
I went to many schools, some of which asked me to keep moving on when I just reached the boiling point for them. By the way, including this very institution that I'm sitting in right now. We can get to that later.
You were a troublemaker?
I was a bit of a troublemaker.
This is why you were, or you went here for high school?
I went here for high school and college. I was asked sometime in my college career not to come back to YU, so I finished my career elsewhere. But again, we can wait for that. Yeah. I went to High-Li, Hafter, Halb, MTA, YU, Queens, And those institutions all made me who I am today.
Wow. Was it something about just sitting in the classroom that just you felt was not fit for your sort of personality, or you needed freshness, newness? What was sort of the...
Well, some of it is blown up. Highlight merged with Hillel to become After, so that was good. And then my parents at some point decided that they wanted a little bit of a different slant for the rest of my education, so I went to HALB and MTA. But my dad went to MTA and YU, and my older brother, Yoni Leifer, shout out to him, went to MTA and YU, so I was just following in the footsteps of the family.
Right. Wow. And then how did you make that jump to finance? How did you make that jump to trading?
So I was in college, and I was kind of puttering around thinking about what my life would look like, my work life would look like, I should say. And the typical paths were a little bit not for me. I felt more entrepreneurial in spirit. But I did have some grounding forces. My parents said, you need to go to law school and pursue that, because a lot of lawyers in our family. So I had kind of prepped myself, took the LSATs, and prepared to go to law school. But then at the penultimate moment before actually kind of starting law school, I asked my parents for the opportunity to go be a trader, which was completely foreign to them in terms of that course to take. We did have friends, the Mayer family, who had been oil traders and traded on the New York Merc for many years. One summer when I was in college, actually in YU, I interned for them, and I fell in love with the place. That was driven from love of the movie Trading Places, which had come out sometime before that. Eddie Murphy, Dan Aykroyd. If you haven't seen it, it's worth the watch. So that movie kind of lit up my kind of world of possibility, and then came to fruition with a summer internship with the Mayer family. And just before I was supposed to start law school, I asked my parents for the opportunity to give me some runway to go ahead and trade. And I was all of 21 years old and single, so kind of not a lot of responsibility. And some of you who may be listening to this may have heard this story in Phil Rosen and Mike Stoller's real estate course that is given here at Yeshiva University. But it's a great story, and I think it's worth sharing. I went to my parents, and I had this proposition for them, which was, I'm going to go to law school, and my parents were very gracious, and we're going to pay for my law school career. $25,000 a year was the tuition course cost, in those days. Substantially more today.
Yeah.
Maybe that would be a third of the year. But anyway, so they were committing $75,000 to my law school tuition. And I made them the following proposition. Give me $25,000, 1 year's tuition, to go ahead and start trading on the New York Merc. And if I was successful, then they would save $50,000 because I wouldn't come back for more money. And if I was unsuccessful, then it would cost them $100,000 to send me to law school, 25 blown on the floor, and 75 of law school tuition. And they bit, and that was my first sales pitch. Well, not my first, but my first business sales pitch. And I went with $25,000 of my parents' money, and I began trading in December of 1992. December 10th, 1992 was my first day in the pit.
Just on that story, is there something more intimidating a little bit about having that sales pitch to your family? Because I know you hear a lot of stories about people who say they have a lot of doubters, but it hurts them the most when their families are the one that say maybe you should pursue a more safe path, whatever it is. In this case, you have to be as vulnerable as possible and say, this is the path that you're sort of setting me on, but I think I believe in myself in different ways. There's something more intimidating and harder about that sales pitch for someone who you might not necessarily know.
Not something I've thought of. Also, this is a conversation of some 30 years ago. But now that you mention it, I can only imagine how nervous I was before that. My parents are amazing. My dad's not around anymore, unfortunately, but my mom's amazing. My parents were then, and they were receptive. And there's a further part to that story, part two, which I'll get to after answering your question. Yeah, I mean, the consequences of a thumbs down were catastrophic for me, right? Because I really didn't want to be in law school, and I really didn't want to be a lawyer. I don't think it addressed any of my core skill sets or didn't really touch on them kind of smack on. So I hadn't thought about it in that regard, but yeah, the consequences of that were very serious. But they made it easy. They said, sure, I don't know that easy, but it took a little bit. But they're like, yeah, we'll get you on this. This part two of that story, which is even better, is they gave me this $25,000 to get started. And I was leasing a seat on the floor of the exchange, and the monthly lease price was $2,900.
And you had to pay to be able to show up to work.
There were 816 seats on the New York Merc, and each one of those seats was owned by somebody or a corporation or an individual, and you either owned your seat or you leased it. Those were your two options.
This is such a foreign concept. This is crazy.
Yeah, it's an anachronism, and like you go back and the movie Trading Places actually depicts a scene in the trading pits, which is a little bit more chaotic than it actually was, but not by that much. So it's just worth, just for you young folks who don't have a perspective on what life was like when you could scream and yell and make a living doing that.
They had their own language, right? Like there's the sign language.
Yeah. You communicated in a pit of, we were 200 people screaming and yelling all day, and you needed methods to communicate that were just not voice, right? So there were hand signals, and every month had a hand signal, and that's just the way, that was the language of the floor. But getting back, so when my parents staked me in that effort, I was paying $2,900 a month for a lease. So after 6 months, you can do the math. We were about plus $100 a week for a clerk. So figure $3,300 a month, almost a little over $19,000 for 6 months, just to have the privilege of trading. And at the end of 6 months, I was out of money. I had $2,000 left in my trading account. And the gig was up, right? The deal I made with my folks was $25,000, right, or I'll go to law school. So I had that second comeuppance with my folks, which might have been even more intimidating than the first one, which was, Mom and Dad, I need to sign a new lease because my 6-month lease was up. The lease price went up from $2,900 to $3,500, and I only had $2,000 left in my trading account. What should I do? And basically, I was saying, I don't have money to kind of continue this because I'm out. And I had this conversation with my parents about whether I should sign a new lease or not sign a new lease. And they thought about it. We were talking about it. My dad's like, well, how's your trading going? And I'm like, well, I started off pretty bad, and I dipped in negative to, kind of negative trading, losing money. And now I'm basically on an upward trajectory. I've kind of built a base, and I think I can do this, but I'm just out of money. And he and my mom said, well, let us think about it. And I was certainly nervous, and that was an overnighter, as I recall. And I woke up the next morning, and I was living at home. And I don't know, for context, I was 22 years old now. And my parents said, we've thought about it. We've decided you should not sign a new lease to continue trading on the floor. And I was crestfallen. And I'm like, I knew it was over. And they waited a pregnant moment and then said, you shouldn't lease a seat. You should buy a seat.
Wow.
Go ahead today, and here's a blank check. Fill it out and buy the seat. And I'm like, what? That's crazy. You're putting that much faith in a 22-year-old who hasn't yet proven his ability to earn a living doing this. And my father's a good businessman, had been in the real estate business, by the way, for decades by that point already. And he did some quick math, and he said, well, the lease is $3,500 a month. The seat cost is $325,000. Even if you stink, we'll lease out the seat to somebody else for $3,500 a month, make $42,000 on a $325,000 investment on the seat. We'll earn 12, 13% on our money. So even if it's not for you and you're not a long-term success there, we'll own the seat and somebody else.
It's a small piece of real estate in his eye.
Exactly.
A desk, yeah.
And from that point on, never looked back. Trading was great. Those 16 years from there on were really fruitful years from a trading and from an economic perspective, from a lifestyle perspective. This is also a hard concept to get, but trading started at 9:50, 10 minutes to 10 every day, and ended at 3:10 every day. That was it. There was no trading before. There was no trading after. the market was closed. So however you ended the day, you woke up the next morning and you started again. There was no overnight trading. Was global markets were not 24 hours at that time. So worked 5 hours plus a day, made a pretty decent living, and was pretty happy about my life.
I'm still just stuck on that story with your dad because I think a lot of us know our parents love us and that they show that they feel that way for us. But that is like a complete sign of trust, love. Like we believe in you. We believe in you, and we want to support you in this. And it reminded me of like just like a classic movie turn of just like, I don't think we should lease it. We're gonna buy it or something like that. Like a boom.
Yeah, I think I might have.
Like
I think I might have kind of created that moment. I'm not sure it really happened.
It's worth it.
Way.
It's worth it. It's worth it.
But to your core point, it's a life lesson that I never forgot from that moment on. I believe deeply in being there for your children and for your loved ones, of course, and your friends. But I guess principally is having this deep faith and trust in your children and the decisions they make. And folks who know me well, and my wife, who I love dearly, Jamie, hi, she'll say sometimes you give our kids too much, you give them too much say and you don't direct them enough. And my view has always been, you create the foundation, you live a certain way, and you demonstrate, you model a certain behavior, and then you give them the tools to go ahead and make their own path, and you support them in every way possible. And I hope that's what we can pull off. We got 2 married kids, 5 grandchildren. Ari's next on deck.
Yeah, yes, he is.
Donnie, not too
He's a good
far
prospect,
behind.
by the way, for the listeners.
And yeah, hopefully we'll be able to support them in all those ways throughout their lives.
It's amazing.
Right, I have a question. You mentioned your core strengths weren't fit for law school, right? First of all, what are your core strengths, do you think? And how does somebody get to know what their core strengths are?
I have the benefit of some Monday morning quarterbacking here, so real time. It's a more difficult question. I'll try and get to it. But you asked what my core strengths I think are communication skills, likability, but that's a little bit kind of self-serving. A sociability and affability that just is engaging, and you want to engage with people on a very regular basis. And I guess it can be applied to law and everything else, but for me, it was marrying that with an entrepreneurial spirit that I felt like I had, which was ready to go and create and earn, rather than be an hourly kind of ticket puncher, which is great. And for sometimes I wish I was on the other side of it, because when you're an entrepreneur, there are fallow times, and you sometimes get stuck in those, and you always wish, or you think the grass was greener, and if I had only pursued a law degree, I'd have been,
right.
But it doesn't always work that way. And how do you identify those? The most successful people I've met in my life do a lot of introspective work and know who they are, and try and kind of highlight or put their finger on, whether it's from a religious perspective and it's a like Musser movement kind of ways to just look inside of yourself and get the truest read you possibly can. And it may not be applicable to your younger folks, but then you get married and your spouse becomes your mirror and tells you everything that's wrong about you all the time anyway. So you get a better view of who you are, because you have people who are in your lives who are happy to point out, what's great about you, but also what needs some work.
Do you meditate?
I don't meditate in the classic sense, meaning I have before, but it's not something I do regularly. But time alone, with your own thoughts, I think is the purpose of meditation. If you have to get to a place where you can really be alone with your own thoughts. So I don't practice meditation as much as I try and sit alone with my own thoughts a lot, and work on myself.
Right. Running towards that contemplation. Nowadays, you say like every single time that you have a free second, you think you just got to pull out your phone and try to busy yourself or something like that. But just getting to a place of, I don't know if it's boredom, quote unquote, but a place where nothing is going on, where you can actually contemplate and think about sort of what's going on. And
I'm 55 years old, and I'm on my phone all the time. And my kids will tell you, I think, and business that I'm the most responsive because I'm always on my phone. It's not like I'm that responsive. It's just that my phone's always in my hand. So I can't even imagine how much harder it is for you guys who grew up with the phones in your hand. Right? You were born with a phone in your hand. For me, I had to introduce it to my life. You didn't know otherwise. But yeah, I think it's critically important to have the time where you separate yourself from that. Also, one lesson. It's not mine. I don't do it. But some of the more successful and better grounded people in my life check their phone 6 o'clock, 7 o'clock at a particular time every evening and don't revisit it till the morning. Mine sits on my night table on the charger, and I'm looking at it in the middle of the night as often as I get up. Oh, it's a terrible habit. But yeah, checking it away for periods of time, I think is super, super important.
Right. It's interesting because, I mean, this week's Parsha is Parsha Shemot, and it says about Paro that his main strategy for the Jewish people was that he would make them so busy that they didn't have time to reflect on their state. Like they were slaves, but they never had time to think about maybe we should try to become free, right? And so
you guys didn't prep me for the Devar Torahs. Had you, I'd have spent some more time on the Parsha. But no, I think you're right, right? They were so busy with the Chomer and Levinim that they didn't have time to realize that they were slaves.
Right, exactly. And it's the same thing. So many times today, people are, I feel so busy that they don't even take the time to reflect to be like, wait a second, maybe law school is not for me. Maybe that path's not for me, all because people are saying that it's safe and people are saying that that's where I should go.
Yeah, I like the way you connected back to that. It's important to get to know yourself as well as best as you can and marry that with the best advice you get from your family and for those who care the most about you to try and align how you see yourself and how they see you, because sometimes they have a view of you that you may not have of yourself, and it could be a little bit more accurate just by virtue of the fact that they've got your best interest in mind. Your DNA is from them, and they have the benefit of perspective, which you may not have. But trying to align those two things is, really, really important for guys in your spot.
Right. So take us back a little bit to the trading floor. You were there. You started maybe on the downward side of a roller coaster, but clearly after you guys acquired the seat, maybe it went up. You stayed there for 17 years, which is, I feel like, a long time to be on the trading floor, learning all these new languages constantly every month of the season, probably very busy picking up, and also went through a lot of shifts. Why did you stay for so long, and do you have any other sort of stories or reflections of what made you learn so much about yourself from the trading floor?
Well, first of all, it was lucrative, right? So owning the seat gave the comfort of not having to pay a lease price, a lease every month, which ultimately that lease went up to $30,000 a month at its peak. So people were paying a lot of money to have the opportunity or the right, the privilege to trade on the floor. So that gave me the kind of the comfort not to feel the stress of having to earn on a daily basis or a weekly basis. So that was great. But ultimately what I did along with some friends down there was try and create a niche within the trading market that was untapped by most of the guys in the pit. And that was just honing a particular approach to trading. So without overcomplicating it for those who aren't traders, it was always having a hedged position. So of the 200 guys standing in the heating oil pit on a daily basis, 180 of them were exclusively trading the first month, spot delivery month. So the closest delivery month, we're trading futures. So today is January 8th. I do that right?
I think so.
So the first futures delivery month would be February, right? Because we know the price of January heating oil right now because it's current. So the first delivery month, which is called spot, is February heating oil. Everybody understood value and what February heating oil's intrinsic value was. And that's what most of the trade, most of the volume was in the first month. As you went out further in the delivery curve, right, 1, 2 months out, 3 months, 6 months, a year out, fewer and fewer people in the pit understood the value of those individual months. And it was also it was opaque and much less volume. So the markets you could make further out in the curve were wider. So as the front spot month, the markets were 5 ticks wide, $1.05 bid at $1.10 offer. When you went further out in the curve, that same market would be $1 bid at $1.40, right? 40 cents wide. So you had much more margin for error. And so what a bunch of the guys did was we called ourselves spread traders, and we would trade all the different months of the market and have a balance. If I was long 5,000 contracts, I'd be short 5,000 contracts in just different delivery months and have a balanced position. And because we can make wider markets and value is less certain as you go out further in the curve, that's where we basically spent most of our time trading. So we were in a highly charged, very volatile, and risk market. And what we tried to do was pull out the risk from the market and apply a strategy that would de-risk a very lucrative market. And that's essentially what the super successful guys did down there. Less gambling, more certainty.
Right. So basically, when you're going deeper into the future and you're getting less and less a sense of what the intrinsic value is, just because of the nature of time and risk, how did you prepare yourself to understand the market that well, to know where prices will be in a year's time?
Yeah, we didn't really know, right? We had to do the work, and the work was what the relative value of that was to the current month or to a different month in the delivery curve. So it was less about how much is February 2027 heating oil worth, more than what is the relationship of June 2026 to February 2027 heating oil worth? What's the value difference? And if I could buy June 2026 and sell February 2027 at a spread or a value difference that I thought, based on years of experience ultimately, if I could lock that in, that's a good trade. And I could be wrong too, right? So I'm long, in that example, I'm long June 2026 heating oil, I'm short February 2027 heating oil at a difference of a penny, 2 pennies, didn't matter, whatever it was. That's where I would lock in value. And then to unwind that trade, you had to sell June 2026 heating oil and purchase February 2027 heating oil. And you'd basically just wait for your opportunities during the day in the pit to lock in that value that you created with unwinding that trade, or carry that position for 6 months sometimes because you knew you had it right and it would narrow, that spread would narrow in the case of I gave, and just provide more alpha along the way. So we really knew how to carry a book and trade based on comparative value, not necessarily intrinsic value.
Was all of this learned on the job? I mean, these are in-depth financial concepts, right? So, and like you said, you moved around universities. Where did you gain that expertise?
That you got on the floor, right? That you learned by trial and error, which that first 6 months was just part of what became a lifetime of trial and error in that regard, and you just get better and better and better at what you do. There was a kind of a stretch of time where everybody go, you're an oil trader. That's very, very risky, and I would just know internally, we remove 95% of the risk from the trade. You kind of have negative days a couple of times a year, and that's not an exaggeration. And that was like Erev Sukkot, Erev Pesach,
really?
Where I just wanted to lower my exposure. So I'd say to a friend or somebody in the pit and said, hey, here's my position. I'm too exposed. I'm going to be away for a week or two. Take part of my position, and I'd give up some money to get out of that, but just so that I could have a nice vacation. And those were really our negative days during our better, just when we'd really nailed it down. Those were the negative days.
Right. So I mean, how much have failure played a role in your career and learning from failure?
Yeah, I mean, I think it's so critical. And what's hard to understand is that we were experiencing success and failure every second of every day on the trading floor, right? So if you bought something thinking that you could sell something against that, and that opportunity to sell disappeared, and then the market fell apart, and you were standing there exposed, which happened every day. I mean, we got better and better, but it didn't mean there weren't moments during every day where you were really staring down the barrel of a gun. And it wasn't, we'll get to real estate, but it's literally the flip opposite. Like, you buy a deal and you don't know for 10 years whether you're right, wrong, or otherwise, or some period of time. And you could feel great about it for the first however long, and you're like, wow, I nailed that opportunity. And then you find out something along the way that kind of debases your entire business approach, or something happens to the market, or they change some laws, New York City. and you can be, underwater well into a trade. On the floor, you got instant results. And for me, it's a critically important life lesson. And to take from that and apply it to the real estate investing, kind of my view of how one should investigate or how I invest in real estate, is certainly learned from my trading experience, for sure.
Right, not to get too high on the highs and then too lows on the lows. What was the reason why eventually, was it family that you, or maybe just a change of path that we decided to sort of change course to real estate?
Yeah. I described this screaming and yelling in a big pit. By 2005, pardon me, I don't remember the exact year. It could be 2004. There was an upstart electronic exchange. It was called ICE. And the story goes, and I'm not sure, I wasn't firsthand to this story, but the guy who founded ICE, I think his name is Brecher, was his last name, something like that. He came to the New York Merc and said, we're going to be able to do this. Everything you're doing, screaming and yelling, we're going to be able to do this electronically. And everybody laughed. You can't. It's so complicated. There are straddles and strangles and crack spreads and all these things, which required 3 parts crude, 2 parts unleaded gasoline, 1 part heating oil, trading that group against each other. And we say, you can never do it. And he goes, well, you could buy my company for like $1 million or something. I don't even remember the number. And we're like, no, it'll never challenge the open outcry system. Electronic exchanges will never obviate the need for an open outcry market. And a couple of years later, 100% of the trade is electronic. Zero is today an open outcry. But by 2005, the New York Merc went public. So it demutualized. So all those 816 seat owners, instead of owning a seat on the exchange, now actually owned the right or the privilege to trade on the exchange and the equity in the exchange. Ultimately, the New York Merc worked for the editor. Ultimately, the New York Merc developed its own electronic exchange, went public, and that was a very good financial outcome for me and for any of the seat owners, or for all of the seat owners. But from an ability to keep trading, open outcry was gone. And so 2007, I had to make a choice whether I wanted to sit behind the computer and continue trading or do something else. And going back to understanding what my skill sets were or are, I didn't think they translated at all to trading behind a computer screen. Much more transparency. The entire market is open and visible to everybody in the universe. So whereas I described trading 12 months out, where very few people understood the value of that, once you're on an electronic exchange, it's literally right there in front of you. Everybody knows the value. So the things that I had developed to kind of de-risk and become a successful trader I'd had to start all over again, and had very little interest in doing so. I was 37, turning 38, and decided that I was not going to trade anymore. And it was a difficult decision.
Wow.
And that was basically December of 2007. I hung up my trading jacket and didn't know what I was going to do from that point on. But I decided that I was not going to be trading anymore.
Right. It feels like more than sort of you hear now people switching jobs, like a different offer coming. This feels more like a retirement phase of like, this is the end of a sort of like career and a span of your life that it looks like the skill set is not going to translate and you're sort of left with a lot of sort of thoughts of where should I go? How did you sort of process that? And especially with a family and sort of where to go with so much unknown.
You teed up one of my favorite stories. And you didn't even know you were. So I actually retired. I told everybody I was retired. I'm not going to work anymore. I thought that we were financially secure enough not to have to. I didn't know what it meant to actually raise a family. On our 2007, our oldest was 9. And, I thought we were good. And in retrospect, we wouldn't have been. But I said, okay, I'm retired. We're done. I told my then 31-year-old wife that I've retired, and She seemed excited about it for the moment, and so what are we gonna do? I'm like, well, we're gonna golf, and we're gonna play tennis, and we're gonna garden. We're gonna do lots of fun things together. And that was January of 2008. March 2008, Jamie said, we need to talk. And I'm like, okay, what is it? She said, this just isn't working for me. You require 100% of my attention. You don't leave the house. I mean, you're not doing anything. We're not doing anything. And you need to go back to work and do something because this is not sustainable. Like we can't live, you and me, hanging out together all day, every day, doing nothing. And she was the reason I decided to go back to work.
Wow. What do you think that was? It was just that you have, like, men in particular have so much built up energy and you want to create. And so when it's all just like left complacently within you,
That's a great idea, but for me, I was so lazy, and I didn't want to do anything. Like I was happy, like I'd done it, and I felt really good about it. And this goes deep, but I identified. When I looked in the mirror, I saw an oil trader. That's what I saw. And when I wasn't an oil trader anymore, and I looked in the mirror, I'm not sure what I saw. And so it was a tough time for me. And it's interesting. I'll note, financially was not a tough time, right? I felt really secure financially, which was a great feeling. Notwithstanding that I still wasn't happy with myself because I didn't know who I was or who I was going to be. And there's a lesson in there, maybe we'll get to a little later, but just to touch on it, work very hard to see yourself as something other than what you do and what you earn, because it's really nonsense. I mean, you're a parent, you're a spouse, you're a child, you're a God-fearing Jew, you're practicing Jew, however you see yourself for the important things that is what your life should become. Don't see yourself for how much money you make or what your job is, because that's an important part of it, all right? That's some part of who you are, but if you can identify yourself as something, try and identify yourself with something with a higher purpose and a real goal, not just, how much money you make.
Right. I was just listening to the Huberman Lab podcast. Andrew Huberman is a famous neuroscientist. He has a great podcast on sort of science-based tools. And he had James Clear, the author of Atomic Habits, very famous. And they were speaking about, the podcast was meant to be about sort of habits. They got on an hour-and-a-half tangent on identity. And exactly what you were speaking to, looking in the mirror and looking at yourself and not being happy because of maybe someone who you were in the past, or maybe an expectation of you have of yourself for the future. And he spoke about going through the different seasons of life and not being sort of holding yourself in this box of who I am, and maybe not living up to that. Immediately, you think that you're nothing.
I mean, they say about NBA players all the time, whenever they retire, a lot of them have mental health issues because they see themselves as an NBA basketball player. And when they're not that, they don't have an identity.
Yeah, I'm glad to learn from you guys, because both of those are kind of things to reflect on. I was living it at the moment, and it was uncomfortable. Right? It was a very uncomfortable time of my life. I didn't expect it to be that way, but it was. And had it not been for Jamie, who said you need to go back to work, and these are more than those are snippets of conversations, but more of reinvent yourself. You have skills, and you can do something else. You don't only need to hit, not pause, but stop at who you were and what you developed into. Go take those and do something right. And the transition, I don't want to say it was easy, but it was built on everybody in my family had been in the real estate business forever, or somehow touched the real estate space. And I'm like, I have a running start because I have this bank of successful, intelligent people who I can lean on to help me navigate the kind of that learning curve, which I had on the floor, which wasn't immediately successful. I had that kind of board, that unofficial board in my life that I could refer to and rely on in terms of helping me navigate that transition.
And so what were your first steps? So you realized real estate's where you need to go. What did you do?
I looked at kind of what I needed from the real estate business. I had some money, but I didn't have a way to earn a living. And one thing that became clear to me quickly was I could spend much better than I thought I could. And this money that I had, I didn't want to keep dipping into to support my lifestyle. So kind of the way I framed it for myself was go find opportunities where there was in-place cash flow. So if you invested $100, you could earn $8, $9, $10 in place day one. And what could you do to improve that over time? And just by luck, that drove me and us, my business, to secondary markets. And this is a quick jump, but just to get into it, it was 2009 now. So 2008 became like a, kind of early retirement, out of retirement, trying to figure out what it is we were going to be or trying to do. And looked at a bunch of stuff, and you may not have the lens to reflect on that time. It was pretty crazy.
I was going to say, you're joining real estate in 2008. That's like sort of
crazy.
I'm going into the eye of the hurricane.
It took time for me to understand, to learn the business and to kind of figure out what I wanted to do, which was lucky because I had about a year of ramp up. So that's mid 2008 to mid 2009. And then mid 2009, okay, we're going to be multifamily secondary markets guys. And that's because it matched what I needed, right? At the time.
Can you explain what secondary markets are?
Sure, non-primary markets. So you have your urban cores. You have New York and Miami, and well, now Miami for sure, but Chicago, LA, and you have the major markets and major urban centers, and then you have the secondary markets, which is basically everything else that's not tertiary. So solid, strong, kind of demographic, education, employment opportunities, but not primary.
That's like a Phoenix
secondary. We started, I'll get through it, but we started in Texas. It was our first acquisition, but really it took, that was 2010. It took us a little while, like 2012, we really found our niche was mostly Midwest and then a little bit of Mid-Atlantic, but that's was really the bulk of our portfolio was from the Midwest through the Mid-Atlantic. And markets like Creve Coeur, Missouri, Lake St. Louis, Missouri, all of the DC metro, around the DC metro, but not DC itself. And from 2010 through 2018, we bought thousands of apartments from, I guess, as far north as Illinois. I'm trying to think of the map, and down to South Florida, and as far west as Texas. And but back to kind of just highlight the point, I went where I knew that I went where I thought it could provide what I needed from the market. So, if you bought in New York City in 2010, the driver wasn't wide cap rates and the delta between your borrowing costs and your in-place return. It was more like, oh, New York's amazing. You buy, you hold, you sell, you make money. Right? and it worked for a very, very long time. And it just didn't address what I needed, because if I bought and I held and I waited and I sold after a long time, how was I living for those few years? Like, what was paying the bills? Aside from savings, which I was trying to avoid doing. So it just forced us to look in secondary markets where you could buy wide cap rates and borrow cheap money at the time and create kind of in place day one real cash flow, real positive cash flow, and then what could we do to improve that over time? So essentially what we started doing, and just to give you some actual metrics, our first deal we bought was December of 2010. So I mentioned that 2009 we figured out what we wanted to do, but it took a year to actually do it, right? Because we wanted to find the right deal, the right opportunity, the right market. And so we bought a deal in Texas, Killeen, Texas. That's a story in and of itself.
Let's hear it.
It's a military market. The largest military installation in the universe, called Fort Hood, is in Killeen, Texas. So we bought an asset called Stone Creek. I just forgot it for a second.
You never heard of this,
Myself.
The Dallas boys never heard of Fort Hood?
Yeah, I'm from Texas.
It's in your backyard, man.
No, it's nobody's backyard. And
I don't get to hang out with the veterans very often, with the military personnel.
when I called it a secondary market, I was being nice to Colleen. It's really a tertiary market, but that was our first deal. And it was fairly new build. It was built in 2 phases, 300 units, 180 in 1997 and 120 in 2007. And this was 2010, so new product. And we bought a true 7 cap, like a real true 7 cap, and we borrowed 3.23% 7-year money from Freddie Mac. And you just do math. That's a low double digit in-place return. And I'm like, oh, this is too easy, right? You buy new product, beautiful, actually quite pretty, and you have in-place cash flow day one that's robust. And what I didn't know, and I kind of knew, but I don't want to look like a total fool, but there's a law that if you're a military personnel and you get orders to deploy more than 30 miles from your home base, you are not responsible for your lease, right? There's no such thing as a lease.
Who's responsible?
Nobody. In other words,
It's free housing?
No, sorry, to be clear. You sign a lease, right? Because you're a soldier on Fort Hood and you don't want to live on base. You want to, because basically it's not for the newly enlisted, it's for folks who have a couple of bucks. So they move into Stone Creek, they pay $1,500 a month for their unit. If that person was to get deployed more than 30 miles from Fort Hood,
They don't pay for
they're
it.
not obligated to pay for the balance of their lease. They
So
just
now you're
hand in
out
the
of tenant.
keys.
Yeah.
And they, normally in every other market, you have recourse. It's hard to collect, but you have recourse, and a tenant is kind of the ding on your personal credit for not paying your rent is meaningful. You'll never rent another apartment. If I look now at a prospective tenant and they have a non-payment of their rent, I don't take that tenant. Of course, with the fair housing laws, whatever they are. But in the case of being an enlisted service person, you're not obligated to pay the balance of your lease. So I was 98% occupied, earning 12% cash-on-cash returns from day one. And one day I happened to be in Colleen, and I see this long line out the front door with Army guys and gals with their duffels on their shoulders, walk one after the other, walking into the office. And I said to the property manager, "What's going on?" Said, "Oh, there's a massive deployment to Afghanistan." I'm like, "What does that mean?" She goes, "All these people, they're moving out." I go, "Well, who's moving in?" She goes, "Well, we don't have anybody here to move in because it's all Fort Hood and all the soldiers are being deployed." So we went from 98% occupied to 68% occupied in a day. And I realized, okay, it's not so easy to be in the real estate business. You got to really know what you're doing, duh. But that was our first deal. And it's no deal I would ever buy again today. But we learned a lot quickly. And it's like very much like trading in the pits. You just throw yourself in there and you figure it out,
Right.
Sink or swim, and you figure it
I was
out.
gonna say, then you turn to these anti-war lobbyists, sent everyone to Washington so that it could be packed.
You try and undo.
Yeah,
You try
exactly.
and undo what's been done. But I'm very much a believer in just, if you have the runway, which is an if, but if you have the runway or the self-confidence or whatever it is that you need, just do it and you'll figure it out over time. It's okay to make a mistake so long as you learn from the mistake and you improve upon it as you go forward.
Right. I was going to ask, what do you think are the biggest mistakes people make? Are they mistakes of, they took action and they shouldn't have done it and it was a poor decision? Or is it they should have taken action, but they were too anxious that they were making the wrong decision? For a young person, what should they be more nervous about?
It's a very personal answer because it depends on your tchuna hanefesh, how you're personally wired. I think that the biggest mistake, the biggest mistakes are kind of on the same thread, which is overthinking and indecisiveness, and then not willing to learn from your mistakes. Do it, figure it out. You'll make a mistake, correct it on the next turn, and you will improve as you go. It reminds me, which is another perfect segue to another one of my favorite stories, is it's 2012. We bought a couple of deals, small deals, And we were developing who we were going to become. And now it's 2012. There's a big portfolio in St. Louis, 1,447 units, 4 different properties, with $100+ million asking price. And we were in the best and final. We were bidding on it, and we were amongst the last 2 or 3 groups. And I went out yet another time to St. Louis with a partner of mine to go tour once again and just do some more diligence. And we spent the day doing it, and I was on speakerphone with my dad, of blessed memory, and my partner who was with me in the car. And my dad's like, "How's it going?" I'm like, "Oh, it's going well, and it looks good." I said, "Well, we just have to take some of what we've learned today and crunch it into our spreadsheet and make certain that the numbers still work," or something like that. And my dad's like, "Stop. Right? Is it a deal or isn't it a deal? If it's a deal, the numbers will work. If it's not a deal, no matter what you put on that spreadsheet, it's not going to work. So decide if you want to do the deal and then just do it, or you don't want to do it and move on. But don't think that another layer of analysis at this point is going to make a difference in your understanding of the asset or in the ultimate, your ability to execute successfully." And I looked at my partner and he looked at me, and we're like, yeah, that was like the aha moment. Like, do we want to do this really, or do we not? And we didn't. And that was an amazing lesson from my dad, again, to, paralysis by analysis, to stop over at some point. It doesn't mean you don't do your work, of course, and you don't fly by the seat of your pants and think that you're great and you're going to, that's crash and burn scenario. But if you've done the work, be willing to make the trade based on the work you've done. Don't overthink it again.
Could you speak to a little bit the maybe sort of, I don't know if you felt it, but the imposter syndrome that a lot of people feel when they're starting a career and they're expected to know a bunch of things and they're working on all these things and they don't know and they have to ask questions, but they feel a little embarrassed, and you're starting basically a new career in real estate when you're 40. Sort of how did that experience humble you in a sense, and maybe what could you speak to people who are trying to learn about a new career, are starting off and are nervous and anxious that if they ask a question, maybe the person will think I'm not ready for it?
Those who know me well know humility is not one of my great strengths. So I don't feel overwhelmed by a challenge. Like, I feel like I have the tools to address the challenge. But here's a credit to another one of my partners at the time, and to Klal Yisrael in general. We spent 2009 and most of 2010 sitting down and talking to some of the biggest multifamily operators in the country, who all happen to be, Orthodox Jewish guys. And they were so incredibly gracious with their time and with their advice. I could drop names, but it wouldn't mean anything except that you all know these names. These are people who have better things to do than to just sit with somebody who hadn't bought a single deal yet and was transitioning from a trading career into a real estate career, and spent hours and hours of their time freely and givingly to help us get our footing and understand kind of what we should be doing and not be doing. And it was invaluable, an invaluable part of our education. We got an MBA in real estate in a year, basically just talking to people who are in the business. And I have a lot of hakar satov to those people, and to my partner who insisted that this was a good path to learn more about it. And there, the humility is there. We were not our heads were not too big to actually walk into a room to sit with somebody who'd done this successfully for a long time and ask them for advice. And I think the takeaway for me is, kind of don't be afraid to give over of your time and of yourself to younger people or to anybody trying to make their way through. That's, it's very gracious, and the way we should be is to just give of ourselves for no other reason than we can.
That's awesome. That's a great story. Two of the biggest hotels that you own, or two of the most noteworthy, is the Altair, right? And then the Harbor Tower, the Bay Harbor Towers. If you look online, a deal you've done with Ari Pearl is featured prominently. So tell us a little bit about some of your favorite deals you've done. Tell us about the hotel business. Take that wherever.
Okay, so you mentioned Ari Pearl. I have two incredibly close friends in my life. Ari's one of the two. I have lots of close friends, and I'm blessed to be surrounded by good friends. Two friends that I have now for 40 plus years. Ari Pearl is one of them. And we never did business together, just best friends. And then in COVID 2020, Ari picked up the phone and said, hey, we have an opportunity to buy a failed hotel on Bay Harbor Island, which I had never heard of. I said, I know Bal Harbor. And he goes, yeah, it's right near Bal Harbor. I go, okay, cool. And that was our first deal we did together. And we're also developing Bay Harbor Towers together. The cool part of that is best friend in the world, doing business together. I know not necessarily the right recipe for success, but when you love each other and you have a tremendous amount of respect for one another, then so far, thank God, been truly blessed to have found a different expression of our friendship in a business context. My favorite deals, and then hotels. So I'll go back to hotels. We've owned 3 hotels. We own, in 2010, December of 2010, we bought the Plantation Inn on Crystal River, a 200-key hotel in Crystal River, Florida. That's 60 miles north of Tampa. Don't ever buy a hotel in Crystal River, 60 miles north of Tampa, if you can help it. We learned a lot very quickly. 9 miles away from Plantation in Crystal River was a nuclear energy facility that was responsible. The personnel in and out of that nuclear facility was responsible for 25% of the room nights of the hotel. I think the first month after we bought the hotel, the company that owned I think it was Duke Energy, if I remember correctly, that owned the nuclear reactor, decided to mothball it and never to work on it again.
Oh, God.
So we lost 25% of our room nights in the first month we owned the hotel. But you bought it at the December of 2010. It's like the best time, or maybe the second best time. Maybe the best time was COVID, but the second best time to ever buy a hotel. So we bought it in 2010. We sold it in 2016, I think. Made a couple of bucks, but very little, but learned a lot about hotels. We also owned a hotel on Martha's Vineyard called the Harbor View. Lost money on that execution. And now the Altair is the third. So we learned a lot about the hotel business. It's not a core focus for L3C Capital Partners. It's opportunistic. We find something we think is makes tremendous amount of sense. We'll do it. And we'll do it in any asset class, frankly, within the real estate space. But it's not a focus for us. Ari Pearl's kind of genius to turn the Altair, which was a Trip Wyndham, that's a flag, a Wyndham flag, TRYP, that had built a beautiful building and then opened its doors just as COVID started. And unfortunately for them, couldn't make their debt service for enough months. I mean, in retrospect, Florida opened up super quick, and they probably would have been able to make that turn successfully. But they couldn't because of the owner's debt on the kind of construction debt on the project, which is another lesson. Don't be over levered. They couldn't stay in the project, and Ari's genius was to turn it into the first and only, still I think, full-time kosher hotel in the United States, and it's been a tremendous joy. I love going there, mostly because you see every walk of kind of people, but you see from Hasidim and Haredim to modern and not religious, and all kind of interacting with each other. And it's a microcosm of our world in one small place. And I love going there, and I'm deeply grateful to Ari Pearl for bringing the opportunity to me.
Right. There's one on the East Coast. It's not fully kosher, but the Stanford Hotel that YU goes to a lot. They have also a bunch of other Jews that will come, and you see like Hasidim, it's also very it's not in the Florida weather and all that, but yeah, it's definitely.
Well, it's a condo hotel, which is interesting because there are the business plan was always and fully executed is to sell the condos. So we bought a 96-key hotel, which includes studios, 1-bedroom and 2-bedroom layouts. and we converted it to a condo hotel and have sold 90+% of the condominiums to end users. And those end users basically put their unit into the hotel's management pool. And when they're not there, somebody else stays there. A guest will rent the room for the night. And when they're there, they can use their condo for themselves.
So you get the rent from the person who's now owning that leasing that condo, and then you also get the hotel fee for when they lease it out themselves.
To be more clear, when we sell a unit, we get the money for the sale.
It's a complete sale.
It's a complete sale, and then the hotel management company goes ahead and manages this hotel.
Yeah.
And if there's revenue that's driven by room nights, that gets split up amongst the unit owners. So based on your ownership and which unit is yours. But it's now owned by an HOA, right? We don't own it anymore so much as we own many units or a few units still left in the building, but it's owned by the HOA.
So when someone comes in for the night and rents that room as a hotel user, do you get fees for managing that, or it's a separate management company?
We don't. A separate management company, Highgate, which is a publicly traded, pretty large company.
Why wouldn't you want to get consistent?
I'm not in the hotel management business, and Ari isn't either. So we wanted a professional management company in charge of that.
Right. Interesting. Okay. And so the goal is to ultimately sell 100%, or?
Yeah, I mean, essentially that's the goal. We're again 90+% sold, so we each own a couple of units still, and we'll see where that goes. But I did want to touch on one of your questions, which is what is my favorite deals. One of my favorite deals is a deal in East Falls, Pennsylvania. It's called Alden Park, and we bought it in 2015. It's gorgeous, most beautiful real estate built in 1920s for the aristocracy of Philadelphia. Massive property, 38 acres, 775 apartments. It had been in a state of disrepair. Its prior owner, was a lender on the deal and didn't particularly care to maintain it well. And we bought it virtually sight unseen. We just loved the basis for 775 apartments. And we spent $80 million renovating that project. And that, very much like trading, very much like being in the multifamily space, that helped us understand kind of development and construction management in a very real way, like immediately right into the fire. But largest historic window replacement project ever undertaken in the United States, 7,500 windows, I think $15 or $20 million just in windows alone. And that was an amazing project, is an amazing project. We still own it and love it very, very much. So that's a favorite project as well.
It's amazing. Before we go, I definitely want to hit on something you mentioned before about sort of giving back. You're involved. I was actually a beneficiary at the Lowinger Minion that you helped run in that community over there, but you also are heavily involved in American Friends for Shalva, HALB. Not only how do you find the time, but is this a priority because, like you mentioned, how your late father was also involved in the community as well? Is this something that you sort of see as more of your identity as opposed to work, and how has that changed maybe over time?
Yeah, deeper question than just the words, for me anyway. Yeah, I grew up in a home that was kind of devoted to community, and I think that's who we are as a people is being there for each other always, and that would be one-on-one for a friend in need, your community in need, Klal Yisrael, Israel. So I see myself as somebody who wants to give back, and frankly, it'd be a life less well lived as I view it, just to be more kind of focused on your family or your immediacy alone. I don't think that's how we're wired as a people. I think we're wired to try and give back, and whether it's financially or with your time, to try and create or leave the world slightly better or different than you found it. And we've been fortunate in our lives to run into stuccos, organizations, missions that speak to us. Shalva, you mentioned, is an organization that Jamie and I have been involved in for 25 plus years, and it's a lifelong connection with them. And it feels really, really good to have watched them go from a small apartment in Har Nof that was dealing or helping a handful of children to a fabulously amazing center in Jerusalem.
We went to yeshiva right by Vegan and Shraga. We would go and visit. Yeah,
that's an $80 million facility or something. That was, I can't remember the exact number that was built.
Gorgeous.
Yeah, and that's we have a fraction of a fraction of a fraction of a hand in that, but feeling is part of something that's really impacting our most vulnerable in our community is feels good, right? And it feels right, and it feels it feels like it should. You just reminded me that Jamie and I were looking for an apartment in Israel for 20 years. Literally from the day we got married, or I was anyway. I wanted to buy an apartment, and Israel was important to me emotionally, or just felt like it was the right thing to do. And 20 years we looked, and nothing fit right. And 9 years ago, we were looking at another apartment, and it felt right. It hit a lot of the notes that we were looking to. And I was standing on the terrace of this apartment. I was looking out, and way in the distance, because this is in Rechavia and Bayit Vegan is far away, but we saw the Shalva sign on the building lit up. It was nighttime. And we're like, darn, this is meant to be. This is our spot. So in ways, it's given back to us in ways that we never would have imagined. That we found this spot in Yerushalayim, which is like my favorite place in the entire world to be. That spot, and we knew it was right because it reflected our involvement in Shalva. So, as much as maybe we've given, if hopefully it's had some impact, it's had as much impact on us as we've had on it for sure.
It's amazing. That's amazing.
That's really awesome. And yeah, Ben mentioned we both would go volunteer at Shalva, and we both, have some good friends from Halv and all those places. So we feel the direct impact from you as well.
For sure. We definitely like to ask one question before we finish officially to all our guests, and you can pick either from the trading experience or from the real estate experience. What is sort of one transferable skill that you learned on the job that you think applies to Jewish professionals across every industry?
It's something I have to think about for a minute. My knee jerk is it's not a skill, but I think that if you're a deeply committed Jew and you're committed to not just the outward part of being a Jew in terms of what other people see you do or don't do, but if you're committed to the principles of living a honest and good life, kind of your business life. This is for me anyway. It's staying true to those ideals no matter what you're doing in your business life. So whether it's trading, and I'm sorry I'm not answering kind of one or the other, but I think the thread for me is that if you just do the right thing always, it doesn't have to be from a religious perspective. For me, it is, but it's also just based morally, like just try and always do the right thing. Don't cut corners. Make certain that every penny that falls through the waterfall in your real estate career goes to where it's supposed to go to, and just let Yashrus lead the way for you. You're bound to find success because that's the fundamental building block of success. Everything else is just luck, mazel, or whatever. Of course, siyata d'shmaya, but if your basis is just being honest, I think you're going to find success no matter what you do.
That's amazing. And do you have any final takeaways as a Jewish professional in the workplace, something you want to leave our audience with?
Do your best to always present the Jewish people, the Orthodox Jewish world, in the best possible light. When I traded on the floor, they called us the lids. Those who wore yarmulkes were called lids. And yeah, it's funny.
They didn't know it rhymed with yids.
Yeah. I'm like,
sounds
that's
good.
yid. And they go, no, lids. And I wore a yarmulke on the floor. The mayor family, who I mentioned earlier on, when they brought me on the floor, my first day of summer internship, I didn't show up to the floor with a yarmulke. I'm like, all right, I'm the business world. I'm not going to wear a yarmulke. And one of the brothers looked at me and goes, "What are you doing?" I'm like, "What do you mean?" He goes, "Where's your yarmulke?" I go, I don't know. We're trading." He goes, "I wear a yarmulke. My brother wears a yarmulke. Put on a yarmulke." And I did.
That's awesome. I love that.
Yeah, I was 19 or 20, and I thought I was cool or whatever. And once you wear yarmulke, like, what's the point of taking it off? They all know that you're from anyway. So I wore yarmulke for 16 and a half, 17 years on the floor. And I always want everybody to everybody out there in the world should know that we actually demonstrate the highest standards in the workplace, no matter what. And it should always come forth. There should never be a question or a snide comment. Always act in a way that reflects well on yourself, but on our community, because that's who we are, and that's the most important thing, I think.
Thank you, Yoni, so much for the time.
Thank you, guys. True pleasure. You guys are awesome. I like to see you in the studio and outside of the studio. You have the same vibe, good feeling, and it's just been a pleasure to be here.
Definitely appreciate it. Definitely also recommend anyone who's in Lawrence to check out the Lowinger Minion, or maybe even, I think it's Yom Kippur, Rosh Hashanah, or both. We have the Baal Shacharis over here.
What?
Over here. Okay. Until maybe, because I actually daven the Shacharis there, so they might give me the offer this time. We'll see. We'll see. Maybe we'll have to bump up Yoni to Musaf. But thank you to everyone for listening. Thank you to our producer. Thank you to JB. Thank you to Ashley. Thank you to Josh. And obviously, thank you to Charles for doing all the editing. Thank you to our listeners. You guys are the ones that drive the podcast. We will see you guys on the next one.